Traders Corner is proudly brought to you by IG, the specialists in CFD trading.
Welcome to Traders Corner. As always, I'm joined by Garth McKenzie, founder and editor of Traders Corner. Garth, welcome.
Hi, Julieta.
Garth, you've done well and you've done badly this week. So let's start off with the bad news, get it out of the way. It's the trade that you entered in on Sasol, and you warned at the time that this is your nemesis stock, and rightly it has so proven.
It certainly has. It stopped us out this week on that sharp sell-off last week, and once again I've failed to make money on Sasol. I just can't seem to get this stock right for some other reason. I mean, I look back in past history, it should have been easy to make money out of this stock, but it seems to confound me every time.
Yeah. Anyway,
let's have a quick look at what happened here. The stock was trending higher. We got a nice steady upward trend, joining all the lows since March this year. And we also identified that there was this lateral area of support which had previously been a resistance, and then when the stock pulls back to retest that, it now becomes support. That's at about 610 Rand. And then we also had this downtrend which marked a consolidation of about a 6-week period of consolidating. And when the share price broke out through that near-term downtrend, I decided, well, that was the buy signal. We were looking for a move up to 650 Rand. And we went along, we bought 360 CFDs at 627 Rand with a stop loss at 613 Rand. And it started out looking beautifully. I thought it was looking fantastic, but unfortunately last week we saw the market selling off quite sharply, and this stock was no exception. It fell all the way down to 600 Rand. So our stop loss was triggered. I exited that trade at 612 Rand 50, and unfortunately that incurred us a loss of 6,120 Rand. And what's worse is that it's now basically gone back up to our entry price, almost like it's wickedly laughing at me.
Don't take it personally, I'd say, but maybe sometimes one just can't get a stock right. You're almost a sort of a contra-indicator, aren't you?
Perhaps
so
I am.
If you go
in this
long
one.
with Sasol, we know to go short, and vice versa.
Yeah,
it's really unfortunate. I mean, Garth, would you be tempted to get back in again? Because if this weren't Sasol, so it had a different name, would you have entered the trade and done, would you have gone into this, the position?
Absolutely. I would have done the same trade 10 times over. If you showed me this setup 10 times, I would have done it 10 out of 10 times. But that's the thing in the market. You identify high probability opportunities or setups that you believe look good. But there's never 100% certainty in the market. There's always a chance that things don't work out for you. And that's why we trade with stop losses and why we put specific position sizing methodologies in place. If I knew with 100% certainty what was going to happen next, I wouldn't risk 2% of our capital on a trade. I'd put everything on it. But the reality is we don't have that certainty. So we work with probabilities. To me, the probability here looked good. Unfortunately, it didn't work. So we move on. We take our knock, and it's not a big knock. I mean, we lose about 1.5% of our account on that trade. It's not serious. We'll carry on.
Yeah, and just a point to make here is if with the benefit of hindsight, you can say, oh, well, it bounced back from that level and it looks as if it's trending higher again. But it might have fallen further.
Well, that's it. And the thing is with this stock, I mean, as I say, I've struggled to ever make money on Sasol. But the one thing I found I have done well with it is my stop losses have always been quite effective, where I could have lost a lot more on Sasol in the past.
There you go, looking on the bright side of things, Garth. Okay, well, let's get, as I said, the bad news out of the way. Let's go on to Naspers, which has seems to be working on extremely well, although latterly in the day, the stock has kind of come back a bit. But tell us about your position in this one.
Yes, well, it's looking good for us, and we've actually added to this trade during the week. So if we have a look here, what I first noticed was that we had this big overhead resistance at about 1,350 Rand, and the stock has bumped up against that level a couple of times over the last month or so. We also have this rising channel, which is quite positive. The stock had broken up and had pulled back to this area of support at around about 1,270 or thereabouts. And I decided a little while later after that to actually go in, and we bought 165 CFDs for our portfolio at 1,300 Rand and used the stop loss below 1,270. It's consolidated quite nicely over the last 3 or 4 weeks, and now it's started to move to the upside, and we've actually today seen a break above that 1,350 resistance area, which is very, very bullish. What's also interesting here, and why I've added to the trade this week, is that there's actually a small bull flag structure over there. And those typically are bullish. You take the height of that, what we call the flag pole structure, and you project that same distance up from the bottom of the flag, and that gives you a target projection level. And And the target projection that we get from that pattern is around about 1,420 Rand, there and thereabouts. So that would be the first target. So what I actually did was I went along and I added to this trade following the breakout of that flag structure.
Yeah.
And also because last week, Thursday, Friday, when our market was really weak, this stock held up remarkably well. And that to me gave me the clue that we know it's an inherently very strong share, and you want to always be in the strongest shares. And I thought to myself, if this sell-off that we're seeing in the market does stage some sort of a bounce, the likelihood is that Naspers is probably going to be one of the stocks that leads the market higher. And that's exactly what has happened. So I went along, I added to the trade. You'll notice I added 75 CFDs. And we had 165 to start with. So what that means is I took sort of around about 30 or 40% of the size of our existing trade and added it to our existing trade. That's what we call pyramiding. And pyramiding, like the name suggests, is you start with a substantial position, and then as you add to the trade, you add to it in smaller increments on the way up. That's what we've done here.
Yeah, because obviously the price is climbing, so you don't want to go in large.
Yeah. You also don't want to increase your risk. So, by doing this, what I would do with this, adding to this trade like I've done here, is actually move the stop loss up slightly so that it doesn't add to our overall risk on the trade.
I mean, Naspers today has been interesting because it got to 14.14 at one point. So champagne bottles out. Certainly, it looks like Wayne McCurry might have lost his bet. But then it's pulled back. But would you say the picture is still looking good?
I think that picture looks exceptionally good. That breakout that we've seen through 1,350 is very, very positive. The likelihood is that it will probably come back and retest that level. It should now act as support, but by and large that is an exceptionally good looking chart, and I think we can still justify higher prices there.
Okay, so carry on to long of Naspers. And talking about the correction, I mean, I don't even know if we can call it a correction, 2 days of losses and suddenly we've bounced back. So maybe let's have a look at the S&P 500 and see if there are any clues to be had there.
Look, I use the term correction sort of in inverted commas, because the proper definition of a correction is a market that pulls back 10%. We certainly have not seen anything of that magnitude. I don't think we've even pulled back 4% yet, if I'm not wrong. But let's have a look at the S&P 500, because this is really, to me, the most important chart in the world at the moment in terms of the equities markets, because it does tend to lead everything else. And what's quite interesting here is that we have actually seen some relatively meaningful technical damage done to this chart over the last week or so. And if you have a look, we've got that uptrend, fairly steep uptrend, which went back to April and joined all the lows since then. Now we've broken that uptrend. There's also another slightly shallower uptrend which goes back to the February low and joins the April low, and we've actually broken below that as well now. So you kind of think to yourself, well, that does make for a relatively meaningful damage to the chart structure there. And I think it certainly puts the brakes on this aggressive rally and this aggressive move higher that we've become accustomed to over recent months. So where to from here? Now, for me, the big support, the really big initial support level on the S&P 500 is at 1900. You can see that's a level where we've got these prior highs over there. And the index actually battled a bit to get through there for about a month and a half. And eventually it broke out. Typically, you would expect a retest of that level. So I think around about 1900 is potentially where we can still go. What we need to watch for now in the short term is, the underside of this 50-day moving average comes in at about 1960. There's also a bit of lateral resistance at about 1950. So let's see how the S&P 500 performs around that area in the week or weeks ahead. My suspicion is that there's the potential that we may still have another leg to this correction, but we'll have to wait and see. If you look at what happened in February here, I wouldn't be surprised if we saw that sort of thing happen. We get 2 sharp days of losses, then about a week or so of sort of consolidation type of activity, and then another leg lower to mark the end of the correction. And it's quite possible that we could get a similar sort of setup here. So for me right now, I'm not rushing out and buying aggressively. I still am a bit cautious as to whether we don't perhaps see one more leg lower in this corrective phase now.
And would you say that the same sort of chart would be developing on the JSE or on the top 40, for example? Yeah,
it's similar. It doesn't look identical to this, but there are obviously similarities. And if we think of the top 40 index, which is the one that I follow the most, the closest, that's got lateral support at about 45,200, which would more or less correspond with this S&P 500 coming back to 1900. So I think those are the first big support levels that we look at on our markets and on this S&P 500, and then we'll see from there.
If it crashes through 1900, so goes below that, and then closes below 1900, do you think that then would also be extremely negative, or maybe a day or so and then it might reverse? Or
look,
do you think, what would the next support level be?
Well, you've got your 200-day moving average here sitting at about 1860. So, in the event that we get a really sharp pullback, maybe we could go to that level. But, my view here is that this is a correction in an overall bull market. It's not a market crash. It's not the end of the bull market. It's probably just a nice correction to sort of reset things. I'm actually quite excited about it because we've got that option structure in the background that we've had for the last couple of months. And if we do get a nice, decent pullback, it will probably afford me the opportunity to actually do some buying, knowing that I've got that options protection in the background. So maybe we'll look at that in the week or weeks ahead.
Not to be selfish or anything, but it would really be nice to see that option structure work out.
I would love to see one of those option structures work for us. They're like insurance. They're effectively cheap insurance. But and I suppose as much as you shouldn't be happy when
the rest of us are losing money.
Well, yeah, that's right. But it would be nice to see, just a nice pullback in this market. Sure. And also knowing we've got that option structure to give us really nice downside participation. We could actually get quite aggressively long of the market if we see this nice pullback with another leg lower from here.
Yeah. So Garth, I take it no new positions for the portfolio this week?
No, not this week. I'm actually quite happy with the portfolio as it stands right now. We're still long of PSG, we're still long of Naspers. We are out of Sasol, and we're obviously out of that Exaro short, which we had for a while. We closed that some weeks back. We're sitting with the portfolio value of 350,000 Rand now. So we've actually gone 100,000 Rand to the good for the year to date, keeping in mind that we start with 250,000. So we're up 40% year to date.
Yeah, so things are looking very, very positive for the charity, which of course we give the money to at the end of the year. And I could just hear the words "good riddance to bad rubbish" in the back of your mind. Cut out of that Sasol position.
Yes.
And Garth, you talk about sort of milestones for the portfolio. So 100,000 Rand to the good is one of them. Another is that we'll have been running the show for 5 years this month.
Correct, yeah. August 2009 was when we started Traders Corner. So this month, the show turns 5 years old. My website that I started at the same time also turns 5 years old. And as a result of that, I've got some promotions that I'm running at the moment. We're also going to do 2 30-minute shows of Traders Corner later in the month, where we look back at some past trades and what have you. That'll be quite interesting. But the promotions that I'm running, I've got a special, a half price subscription on a 1-month subscription to traderscorner.co.za. It's 149 Rand for the month now, as opposed to the normal price of 299 Rand. So anybody that would like to take that up and go and see the type of analysis that we do, a lot of what you see on this show gets, and a hell of a lot more for that matter, gets published on the website on traderscorner.co.za. So go try it out for a month, 149 Rand. It's half the normal price that you would pay for a 1-month subscription. And then the other interesting thing is that we are also offering the high probability trading course with a 1,000 Rand saving. Okay. I've scheduled dates now in Johannesburg, Cape Town and Durban. You can see them up on the screen now. The normal price for this course is 2,490 Rand. I'm offering it now at 1,490 Rand just for these 3 courses to celebrate our 5-year birthday of Traders Corner. So anybody that's interested in attending one of those courses, please email me, garth@traderscorner.co.za, and I'll send you the details.
You must feel quite chuffed. You've got through sort of I'm just trying to make some analogies here, the terrible twos, the toddler years of the show.
Yeah, and
Going
I
into
suppose
big school now, Garth.
and the first and second year of this show actually were the most difficult for me. The third, fourth, and now the 5th year we've actually done quite nicely. And the nice thing is also to have a track record. We've got 5 years of promoting proper trading principles under the belt now. It does work, and I think we've got a lot of past successes to back it up. Yeah. And I'm very happy doing the show, and I'd love to continue doing it for another 5 years, if not more.
Jolly good. Garth, on that note, we'll leave it there and we'll chat to you next week. As always, you've been watching Traders Corner, and that is, of course, Garth McKenzie, founder and editor of Traders Corner.
Traders Corner is proudly brought to you by IG, the specialists in CFD trading.